You talked more recently in the last 3 months or so about the bad apples following the collapse of SVB. How many bad apples did you find in the last quarter?
Well, we are continuously trying to find them. And earlier in the year, we were out of Adani Group in India. We have been out of a big Swedish property company, which went bad. And we have a whole team who's trying to navigate this and make sure we are out of the biggest trouble.
In the latest quarter, you did get a 10% return, although you dragged down just a bit from certain real estate investments and certain renewable energy infrastructure assets. How do you view your investments, particularly with renewable energy infrastructure, at a time where there seems to be a shift away from that a little bit and towards oil and gas?
Yeah, we got it into our mandate a few years ago, and we were very slow in the beginning because we thought prices were too high. There were too few projects, and everybody were chasing the same project. So we went really slow. I think it's more attractive now. I think the returns you can make in this sector now is better than it was. So I think you should expect our pace to increase a bit.
What about real estate? How concerned are you? There are a lot of people raising concerns that we haven't seen the true reckoning yet, particularly in commercial real estate. Have you been selling? Have you been trying to shift away from that?
No, we've not been selling. We have been staying put. We have just continued to own what we had. I think we have seen a lot of the damage in this area now. We've had rates increasing already. We have seen high vacancy rates. We've seen the whole COVID effect. We've seen the banks having troubles. And so I suspect that we may have seen a lot of the bad news now.
So you think, in other words,
we also have big exposure in the logistics side, and that those investments continue to perform really well.
You said that you think that a lot of the carnage has already happened. Can you elaborate on that at a time where people say that if the true mortgage rate were really percolated into valuations, you would see some 30% declines, in some capacities more? You think that that has already been either priced in or shrugged off because of strength?
I'm not sure all is priced in, but we for sure have taken some pretty big write-downs on our property portfolio. So there's already quite a bit of damage in there.
Nicolai, the concern now, as you know, is over in China. At the start of the year, you and Lisa caught up in Davos, I believe, and we were talking about China reopening and the boom everyone expected. That boom just hasn't materialized. There was a threat to pushing inflation higher, and now they're exporting seemingly disinflation. Nicolai, as you work through the fund right now, how exposed are you to some of those themes, and have you had to pull back in any way, shape or form?
Well, we have relatively small investments in China, but you're right. The boom in China after the reopening has been less than we expected. Now, I guess the only advantage that we can see of that is there is less pressure on inflation globally on the back of that. But less good news for the Chinese companies.
Could you give me some detail on what exposure you have in China, Nicolai, where that is?
Well, we are like between 3 and 4% in China. And if you add on Hong Kong and Taiwan, we are at 7-8%.
Are you worried about the lack of transparency in the last few days or so when they start to pull back on offering information about youth unemployment? Does that concern you?
No, I wouldn't say the one particular number on youth unemployment has scared me. But, we are an extremely transparent fund. We love transparency. We were just voted the most transparent fund in the world. So generally, the more information we can have, the better it is.
There's a broader question about whether we're seeing a sea change in terms of some of the global allocations and some of the views on traditional haven assets. And I think about not only with respect to sovereign debt over in the East, but over in the West as well. People have been talking about the deficit in the U.S. and how that could potentially cause difficulty, indigestion among buyers. Is that a problem for you? Is that a concern for you? Have you started to shift and diversify it all away from treasuries and your bond holdings?
No, we have not shifted anything on the back of this.
So are you looking to really understand this or have conversations with policymakers? Is this sort of weigh in on any of your considerations when you look at credit or you look at any interest rate hinged assets?
Well, we have big teams who look at this and who are in continuous conversations with policymakers and so on, but we have not made any changes lately.
Nicolai's done interrogation training, Ramo. Do you not know that?
Are we interrogating? Is that what we're doing right now?
The skill is short answers.
Well, it's good. It's good, and honestly, it's evidently, useful.
Nicolai, the year so far.
You know from that theory that a shorter answer on average are more truthful than the long answers.
They're very true.
That's actually true.
Very true. Nicolai, they don't lend themselves to fantastic conversations sometimes, though. So I'm going to do my best just to get a bit more out of you if I can. And Nicolai, the year so far, as you know, has gone from soft landing to no landing to hard landing, back to soft again. There is this idea that we can somehow escape the inflationary threats of the last year without an economic downturn in the United States. Do you subscribe to that theory, or are you in the camp where you're expecting rates to stay higher for longer here?
I think they will stay high for longer. And we've been saying this for a very long time, and I still continue to think that's the truth. Now, one of the new things here is that the link between climate and inflation has become stronger. And we recently seen, the climate impacting harvest, prices such as olive oil, coffee, beef, all these kind of things. But the new thing is really that the change from global warming to global boiling has meant that there are parts of the day where you cannot work across the world. And so productivity in society is decreasing, and that is a new inflationary pressure.
Nicolai,
and so therefore the link between climate and inflation is stronger than before.
In Spain, as you know, for a long time, that's been true. They call that the siesta. Where are you seeing elsewhere that's happening? Where is productivity collapsing because of climate risk? Is it in countries outside of the traditional places we'd look in Europe? In Italy, in the south of Italy, it's been the story you stop work in the middle of the day forever, for as long as I've known. Where is that a new development?
It's a new development in many countries, and we've seen heat waves in Europe that I've never seen before. July is the hottest month we have seen since the world began. So this is new, and it's getting worse.
So
it's not called siesta anymore.
What's it called now?
It's called global boiling.
So from your perspective, for someone who's got to run a fund with exposure to these things, what have you changed?
I just think you need to be more conscious about inflation and take into consideration that the inflation may actually be higher for longer.